Well, I think that the market has adjusted downwards, and I think we are in a buying range. Let's put it this way. I think the economy, uh, it doesn't matter whether India grows at 5% per annum or 7% per annum, but I think if you look at the next 10 years or so, you could easily expect an economy that on average grows anywhere between 4 and 7% per annum, which is a very high growth rate compared to practically no growth, which I expect in the US or in Europe. So when I believe that earnings eventually track nominal GDP growth in the very long run, earnings cannot expand much more in the long run at nominal GDP. Otherwise, GDP will be all earnings one day and nothing else. So, in the long run, earnings expand at roughly GDP growth rates. So, my view would be that the valuations in India, the way they are now, are reasonable. But I'd like to add one thing. In the last few years, indexing has become the game in town globally. A lot of money has been invested passively in ETFs that just buy the index. And when I look at 2016, we see huge differences in the performance of different sectors in the US. The best performing sector were essentially gold shares. But other than that, we had energy being the best performer. And one of the worst performer was biotechnology. So I believe the world is now moving back into essentially a stock pickers environment where people who are in the right sectors, they perform very well.
So is oil and gas your big bet? And it makes sense because ONGC's rallied what? Close to 40% in the last 9 months, completely under the radar, mirroring what oil prices have done. So are Indian oil and gas assets of interest to you?
I believe in 2017, some commodity related stocks, including oil and gas, will be reasonably attractive. Probably what I've noticed to be the most attractive sector are plantation companies, agricultural companies, and fertilizer companies. I think they have significant potential on the upside because I expect agricultural commodity prices, which have been very weak since 2011, that these agricultural commodity prices will bottom out and start to increase. So I think the agricultural sector, fertilizers, are relatively attractive.
Since you mentioned earnings and overall growth projections for the Indian economy through the course of the next 12 months, we conducted a poll at ET Now talking about what market participants feel the market can do in terms of pure returns for this year. And a majority believed that the Indian market can make a fresh attempt at record highs in 2017. That is the Nifty going past 9,000. Do you think that is possible?
Well, I'm not sure we'll see a record high right away, but as you know, in the world, we have essentially people that pursue expansionary monetary policies, and we talked before about the Fed increasing rates. I think if the Fed increases rates, they will make sure that the rate increase doesn't lead to real interest rates going up substantially. So if you have inflation at, say, 5%, and you have a Fed fund rate at 2.5%, you're still negative real rates of 2.5%. And I think in India, a monetary policy will be pursued that is pro-growth. And you also have a fiscal policy that is pro-growth, theoretically. I don't believe much in fiscal policies, but this is the view of economists otherwise. And so I think that over time, the rupee will continue to weaken and stocks will adjust on the upside.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.